The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 4th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call No One Knows What They Can Do Until They Try. Robert I, King of Scotland, struggled to protect his kingdom against the invasions of the English. There came a time when he was driven from his castle and forced to flee to keep from being taken prisoner. He took refuge in a cave where he suffered from depression and uncertainty of the things to come. Robert I felt as if everything was lost. Have you ever felt like that, folks? As he sat there dejected in the cave, he spotted a tiny spider spinning its web. Now, time and time again, the spider attempted to spin its web, paused, and remained still for a few moments before it put forth another effort. Finally, after repeated failures, the spider succeeded, and the web was completed. Now, in the process of watching the spider, Robert I discovered three outstanding characteristics of a spider. Number one, its tremendous patience. Number two, its tolerance. And thirdly, its presence. You see, the spider never gave up. So King Robert took the time to clear his mind, began to concentrate more objectively and logically on his current state of affairs, and lastly, he determined to make every effort to regain his people and never stop until his mission was accomplished. Robert I persevered and moved consistently toward his dream, and in 1328 got the English to recognize Scottish independence. Each of us, folks, possess these three same characteristics. We just have to use them. That's the tremendous patience, tolerance, and perseverance. Perhaps you'll look differently at the next spider you come in contact with. Something to think about. Winston Churchill, he once said, "This is the lesson. Never give in. Never, never, never. In nothing great or small, large or petty, never give in, except to convictions of honor and good taste." Folks, no one knows what they can do until they try. Let's go check out these markets. Let's go see what they're trying to do. Right now, the Dow futures are off 28 points. They're trading out at 15,863. S&P futures off nearly 5 points, trading out at 1786 and change. NASDAQ futures down 8. They're trading out at 3467. Russell 2000 off about 2.5, trading out at 1120. King dollar back on the move here this morning, up 262 pips. They're up at 26 cents, trading out at 80.88. We've got Goldilocks, so the hard currencies, they're trying to make a move this morning. Gold is up $6. Not really a big deal out there. We'll take a look at gold and silver. Silver's up 24 cents. Trading out at 19.30. Light sweet crude having another nice morning, up 1% this morning, up 98 cents out there. Light sweet crude may have some legs in it. They have certainly flashed a buy signal yesterday. We'll see if there's some follow-through today or whether it was a one-hit wonder. Our call-in number is 877-927-6648. If you give me a call, would be happy to field your call. We'll take a look at anything you'd like to. A quick peek around the globe we see here over in Europe. The DAX is off 97 points. That's a 1%, a little over 1%. FTSE down 37 points, about 0.6%. Hey, the Nikkei down 341 points. At one point, that was 2%. At one point, it was down 400 and some odd points out there. We'll take a look at, maybe you can remind me, just, knock on the door, remind me. Hey, Steve, we'll go take a look at the Nikkei. Hang Seng off 181 points, about 0.7%. Shanghai, that was up 30 points, up 1 3/10%. So, let's begin. Where do we begin out here? Let's actually take a look at the longer-term charts. Let's switch off of the daily. Let's go take a look at the index futures. Let's take a look at the daily charts and see what it is that we can see out here. Well, let's start with the Russell 2000. Russell 2000, now this is a delayed chart out here by about 10 minutes. Right now I've got the Russell 2000 trading out at about 11.19 out here. That's back underneath the area of resistance, or support, I should say, which should have been 11.23 even. Steve, now it's a daily chart. So that means that not until the day is over will we know if this really does act as support. And that support being the key reversal session, bearish engulfing, really more of a bear sash candle. That is from October 30th, the high of which is 11.23. That really should have acted as support. Maybe it still will if we take a look at yesterday's close. The actual close was at 11.2290. Hey, that qualifies to me as 11.23 out there. We'll see if this area acts as support. If it does not, where is price likely to head to? I would have to say the swing point from November 20th out here, somewhere between the 1093.90 low and the 1107 high out there. That is on the Russell 2000. So that is showing some weakness by getting back inside the, an area that should have held as support. We'll see if it continues today. Let's take a look here at the Dow futures. Right now, Dow futures trade out at 15,867. Where are they headed to? Well, we've got a little trend line here off of the May 22nd high. That also was a key reversal session out here. We've seen key reversal session after key reversal session. I mean, so many. I'm tired of actually saying it. You may be even tired of hearing me say it out there. If so, I apologize, but I just have to call the markets the way that I see them out here. Well, if you take the top of May 22nd, and then you go to the next key reversal session out here, that's the one that took place on November 7th. That one failed. The one on May 22nd back in 2013. That did not fail. So where is price? That gave us a little trend line out there. Price headed back to that trend line. Of course, the key reversal session, just like we took a look at inside the Russell 2000, the top of which is November 7th inside the Dow, that price point is 15,779. Getting back inside there, that will spell boil, toil and trouble, something like that. Al gave it to me yesterday, and I said I would look it up and I would write it down or something. In the event here, that's what we want to be watching for today. 15,779. Right now it's trading out at 15,866. So there's its levels, both horizontal and a diagonal level of support, and that is inside the Dow futures. Now, if it breaks that, where is it likely to pull back to? Well, if we just take a look at a normal dead cat bounce inside the market, most certainly back to the 0.382 retracement, 15,584. That's logical because that would take you right back to the top of the 1,000-point consolidation range that it broke out of. So that would be a next logical step if, in fact, it can break the support level. Now, the Dow has been showing some weakness, but we can see really just the pullback here so far, really not that big of a deal. If we take a look, let's talk about not that big of a deal. Well, you'd have to come take a look at the NASDAQ. This thing has hardly budged at all. It's right now just trading inside of the candle that formed on November 27th out there. So this thing here has had basically no pullback whatsoever. What's the likelihood? If the market continues moving lower, I would suspect that what we will see and where we'll get a piece of information is from the NASDAQ futures, and that'll be coming back into the high from November 18th. That was the key reversal session out there, the top of which is 34.25 and change. You're at 34.67. So what does that make it? About 35 points, something like that, to the downside. Now, on that retracement, even if we just come off of the last swing point out here, meaning from the low on November 20th to the high that was put in on Friday, you'll see that by touching that area, it gets almost down to the 0.68 retracement of that move. So the NASDAQ here has been the strong index out here. And unless this thing, look, if this thing gives way, then all heck will go ahead and break loose because this has been doing a pretty good job of stabilizing the market out here. ES Mini, a bit weaker than the NASDAQ for sure. It's trading inside the swing point here from November the 21st. It's going to come back, or it should come back, and test the October 30th high out there. And that is out at 1773 right now. It's trading out at 1787 in the marketplace. Again, it was in a, so far, not a lot of damage yet that has been done. Of course, you want to talk about damage out there, and that is that VIX index. So let's go pop over, take a look at the VIX index. Let's see what it is, what it did yesterday. The VIX here yesterday closing out at 1455. yesterday was not a one-hit wonder, and that says you've got to be careful out here because this is where the real damage, the real carnage is done. The VIX here this morning, let me see if I can, I can't see what it's trading at here. Give me that. No, I can't. But we know it's trading up a bit here. So we want to be paying attention to the VIX. Now, if we just take a look at retracements here, what's a normal retracement for the VIX? You'd go from the swing point high from October 9th down to the low that was established on November 15th. You'll see 1556. That's a likely outcome. That's just your dead cat bounce out here. 1556. 1777 more likely. That'd be sweet. 618 retracement out there. If we take a look at the last time the VIX moved from off of its lows out here and take a look at the retracement, we'd come from the highs on June 24th down to the low out here on August 5th. You'll see that the 0.618 retracement was 1806. The intra-session high that it got up to was 1781. So I'd have to say that 1777-ish mark, 1770, is a likely target. Just fasten your seatbelts, folks, and hold on. Make sure you've got stops in place. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 34 points right now. Let's go check in on the 30-minute chart of the ES Mini. Boy, it had it all yesterday. And what I mean by that, if you're watching us on TigerTV, thanks so much for doing that. If you're listening on the radio or your mobile device at TFNN.mobi, we absolutely appreciate that. Remember, you can catch the live stream of the show by going to the homepage of TFNN.com. Over on the right-hand side, upper right, you'll see a button, 3 smartphone devices. Click on that. The show will stream live to you. You'll be taking a look at my charts here on the screen. You'll see an A to B equals CD down. Now, our A point started out here. That came in at 11 o'clock. It's a 30-minute chart we're looking at, 11 o'clock in the morning on Friday, while most folks were just simply still digesting. Maybe you're out there shopping, doing some Black Friday shopping out there. The high of that swing point was 18.1250. That's your A point. Your B point was a move down right into the lows out here. Came in at about 10:30 or so. We're at the 18:01 level, 10:30 on December the 2nd. Makes a retracement into 1:30 in the afternoon on December 2nd, and boom, the sky falls out. Now, this move off of that C point out there, very explosive. Communicated to me at least that we were going to do more than a 1-to-1 A to B equals CD. Take a look at the strength of this move off of that C point, much stronger than the move from the A to B level out here. It at first did a 1 to 1.272 A to B equals CD. It stopped right where it should have, which was Apogee. Apogee is a real hidden gem out there. The price of point of Apogee, this was back in the early part of November here. That came in at 1794.50. So stopped right where it should have. Bounced from there and then continued its move down. Now, yesterday, as it continued its move down, it made the 1 to 2 A to B equals CD. That was taking place at about 2:30. So at about 2:30, that's when I started posting some statements into the Tiger's Den. And folks, if you haven't tried the Tiger's Den, you really ought to. You know, life is all about making sure that if you want to take your game, whatever game it is, maybe your tennis game, your golf game, your trading game to the next level, always increase the peer group that you are hanging out with. The Tiger's Den is a great, fabulous peer group out there. That's when I started posting inside of the den out here. We had a couple of doji candles that were forming. One was at 2, one was at 2:30. And what we really had was one of Stevie's favorite reversal patterns that was taking place inside of the market. We'll go ahead and I'll show you what that actually looks like. And that is called price relative strength divergence out here. And you can see as price was moving down, if you're watching us on Tiger TV, there was a little hammer candle that actually formed right here. Let me get my cursor. I can tell you what time it was. So the first actual price relative strength divergence that occurred was at 12 noon. You had a hammer candle out there. All you had to do was just simply wait for one more candle. It's called getting a second opinion, folks. When your money is on the line, I say wait for a second opinion. You will make and you will save more money if you just wait one more session. Well, we waited that second opinion. We didn't get that confirmation, and that was at the 12:30 time frame. That went ahead and set prices lower. Next time we got to a swing point that made any difference out here, there was no bullishness. See, the key to any market, any time frame, anything that you trade, you got that word there, anything, absolutely anything, you must wait for a reversal signal. I don't care what pattern it is that sets up. It doesn't matter whether it's the lightning bolt, A to B equals CD. It doesn't matter what pattern it is that's setting up. You must wait for a reversal signal. You see, the bulls and the bears, they cannot hide. They cannot hide, folks. And so what you want to do is you want to be drafting right behind them. Well, the bulls actually did show up. They showed up right here at 3 o'clock, right on schedule. As the market was making that price relative strength divergence, I then suggested that we'd see a move somewhere between 1794 to 1798. The actual high that came in was right here at 4:30 in the morning. It came in at a price point of 1795.75. So right in the middle there. Now what are we seeing? We're seeing the price move lower out here. I'm not going to be paying attention to this little price relative strength divergence that showed up right here at the time frame of 8:30 out here. So that's nothing to be paying attention to. What we can also see as we go take a look at the 30-minute chart right now, we are getting into that extreme. I do mean extreme oversold territory out here. So we should see some kind of a bounce shortly after they release the dogs, after they release the hounds here in about a minute's time when the market actually opens. So I do expect that we'll see some kind of sideways move, maybe a little bit of a bounce just to work off a little bit, but not right away, not at 9:30 exactly, but we should see a little bit of this oversold condition get worked off. Maybe some bulls try to rush in here, and that's really what the bears want to see. This market is being sold, folks. There is selling pressure. There is no buying pressure. That buying pressure has been gone for a little bit of time out here. We'll go take a look at that when we come back. 877-927-6648. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 54 points, trading out at 15,859. S&P off 8, trading at 1787. Composite down 14, trading out at 4,022. Russell 2,000 off 4 points, trading out at 1119. Apple down $3 and change. Microsoft flat. Google up $1.42. Cisco down 4 pennies. Intel up 18 cents. Leading the charge, the upside, CF Industries Holdings. Wow, up $15 and change right now, up 7%. I do not see any news behind the move out there. Western Digital, WDC, that's up $1.78. That's up 2%. Rand Gold Resources, GOLD, that's up 69 cents. Don't bite on that. Not just yet. Rio Tinto up 72 cents. That's up 1 3/10% out there. Mosaic, haven't looked at Mosaic in like forever. That is up about 61 cents, up 1%. Hewlett Packard up 71 cents. To the downside, Express Inc. That is taking the expressway to the downside, off 20% right now, down $4.70. I'm going to assume it's got some volume behind the move out here. They came out with numbers before the bell. Their net income for the third quarter was $19 million versus, come on, baby, where are you? Come on, show up on my screen. $19 million. Oh, there you go. It shows up 4 times. $19 million versus $17 million. So they did make the bottom line. Maybe they're struggling here with the top line. Now I got to erase all that. Let's see what they report. Top line number. What does it matter what they reported? They're getting whacked here. Sears Holdings, that's now down 8%. They're off about $5 right now. Bob Evans Farms, BOBE, that's off 8% this morning. They came out with numbers as well. They sold 332 million worth of meals versus 329. Their net income was $6 million versus $11 million. So boy, getting cut in half some big expenses out there inside of Bob Evans. Marathon Petroleum, MPC, down 4% this morning. Apple off $3. Tesla down $3. El Paso Pipeline Partners, that's off 5% this morning, down $2.75. Tesoro, that's off 4%. Kinder Morgan, that's down about 6%. Teradata off 4%. Our call number, 877-927-6648. Give us a call. Happy to take a look at your stock charts. Let's tool around and see what we've got going on inside the commodity sector. So let's go start off, and we'll take a look at gold. I'm going to get that William Tell Overture. We'll get that tuned in. That way Al can cue that up every morning when I decide that we're going to go take a look at the metal. So that'll be for Hi-Ho Silver. So we'll have to get that William Tell Overture. Just add a little zest, a little music to the background here. So let's take a look at Goldilocks out here right now. You got gold trading out at 12.26 out here. Gold does have the it's a daily chart we're looking at. Gold does have an A to B equals CD down. That ought to take us into the bottom of the swing point at 11.79. You're still trading inside the swing point from June 28th, the high of which is 1234.80 out there. So no reversal or anything like that we see in Goldilocks here, at least not just yet. Silver, if we take a look at Hi-Ho Silver. Silver today having a key reversal session out here. There we go. How about that? You got to love life out here. You just ask and you get it. You got to love it. Nice going there, Alberto. So now as we take a look at silver, you've got a key reversal session. What is a key reversal session? Well, you got to have 3 things, folks. You got to have a extended market. We determine this to be an extended market by just simply taking a look at the relative strength index, the 14 period. When you're down towards the bottom level in that 30 area, you're extended to the downside. Number two, you have to exceed the high and low of the previous bar. Well, we can see that took place. The high of yesterday was 1933, the low of 1897. Today we've already exceeded both the high and the low. The third thing that you need, and that's not done just yet here, you need a close in the opposite direction of the trend that you came from. So any green bar, any close today above $19.10 would qualify as a key reversal session. However, the last key reversal session really didn't work out that well, and that was a trading session here from November the 25th. Right there. We'll go ahead and erase that out there. So that's why I say I'm getting a little tired of these key reversal sessions that show up there. Not show up there, but show up in the marketplace. Let's go take a look. So what does that mean for silver? It says silver is trading inside the swing point here with light volume from June 28th. And I would say the bottom is a potential spot, 1818 or so would be an area to target. I would not. I personally wouldn't buy silver based on that key reversal session out here. You need some more evidence than that. Light sweet crude, that's a whole different matter here. Light sweet crude pulling back a bit, but boy, that thing really took off the bottom out here yesterday. This thing broke its descending price channel. Looks like it wants to at least make the 99.59 area. That is the dead cat bounce, the 0.382 retracement. That's off of the high from August 28th to the low that was put in a few trading sessions ago on November 27th. Out at 91.77 out there. So that looks pretty positive. Volume yesterday, 234,000 contracts. Today, so far, 89,000. Bonds here. Bonds were moving lower earlier this morning. They're moving lower. They're going to go ahead and at least complete that 1-to-1 A to B equals CD down and come back and test the swing point low from September 6th out at the 128.12 level out there. Of course, bonds, if you take a look at the longer-term picture out here, longer-term picture, here's the weekly chart for bonds. You can see this nice descending price channel. That price is traveling in. Good chance it's going to go ahead and take out the lows here from September the 13th and move down to the bottom of the price channel. That might be the spot where you take a look at a buyout here. The proof of that will be a close below September 6th is a weekly chart we're looking at. If you do see a close below 128.12 out there, the likelihood is that you'll see price move down to the bottom of this descending price channel. If you want to know where the bottom is, just go take a line tool. What I would do, what I've used, just kind of do it in reverse. Maybe you could extend it. I'll tell you what I would do. I would use the close of the session from October the 12th out here. This is a continuous contract on the weekly that we're looking at. And that close was 149.18. I'd use that touch point. I would use the close on January 14th, 2013. That touch point out there is 144.16. Just use those two closes. You'll see the bottom of the descending price channel out there. Natural gas here. Natural gas yesterday forming what's referred to as a high wave candle out there. That means that it's confused. That's all that it means. It's not a reversal session, but it does say, hey, it's confused as to what it wants to do here right now. Today, though, it's saying, hey, I'm not confused. I just simply want to go higher out there. We know that it's contending with this 0.786 Gartley sell pattern. We also know it's up towards the overbought territory. So the confusion candle from yesterday, is it would be pretty typical based on the level that it has attained thus far. But that's all that is in the picture as we speak right now. If we take a look at currency pairs, let's go check in on the Queen. Let's go see what she is doing. Oh, I must have a really bad tick out here. That makes it really tough to. Let me just delete this here. The heck happened there? There we go. Let me see what happens if I update it. Oh, man, that's not going to be very good. Let's go take a look at, let me see if this is in the larger charts too. Oh, man. So a bad tick in here. That's a bummer. Let me try the intraday chart. See, I may have a difficult time taking a look at the euro this morning. Here's the euro Japanese yen. Let's take a look at, see if we can find, I can't look at the euro with you guys right now. Sorry about that. Let's go take a look at a different currency pair. Let's go take a look at the U.S. dollar Japanese yen. Let's go see what we have going on out here. U.S. dollar Japanese yen. Still not really giving any kind of reversal sign. We know that it made the 1.618 butterfly. Let's go draw that pattern in here. Let's get rid of the 1.272. Remember, I said every single pattern that you trade out there, you must wait for a reversal signal. You got to wait for a reversal signal. Just knowing that the U.S. dollar Japanese yen was going to make a nice 1.272 butterfly. We had the price level 101.69. You got up to that level here on November 25th. You got to wait for at least a reversal candle. That's what you actually got on the trading session of November 26th out there. Nice little bearish engulfing candle, very close to it. Might have just been a piercing candle, very close to it. As I said, second opinions, they always pay off, folks. Well, the second opinion here, that was a wide-ranging bar erasing that bearish engulf, and that said it wanted to go up to the next level. The next level was 103.09. You can see it got up to that price point. It did that on December the 2nd. Yesterday's candle, a little piercing candle out here, but still, until you really see it close, I would have to say underneath the low of this session here from December the 2nd out here, price could still certainly move higher. It is most certainly overbought, but you want to see some type of confirmation that it wants to move lower. And on the daily chart, other than having a completed butterfly pattern, as I said, we'll draw that in. Let's go do that here right now and take a look at this butterfly pattern. Where that's what it looks like right there. There's your 1.618 butterfly pattern out there. But until you actually get a reversal signal out here, you have to be very careful. And today is really the second opinion. If you get a close lower today, ideally the close you'd be looking at is below 102.21. That would say, you know what? Now is the time to take a look at shorting this currency pair. That would say that price ought to pull back at least to the 100.91, more likely 99.39, your 0.618 retracement. And that's just really of the C to D leg. It would be much different if we went from the A to the D leg out here. That is on the U.S. dollar Japanese yen currency pair. Let's take a look here at the Great British Pound. Great British Pound here, still trying to go ahead and make its move up to the 166 level out here. That's the measured move of this little consolidation pattern that it was in, giving it a little bit of a bearish engulfing candle as we speak here right now, but still a lot of time left in the trading session out here. So that is on the Great British Pound, U.S. dollar. Of course, you might be saying, hey, why haven't you taken a look at your favorite currency pair just yet? That's a good question. Let's go take a look at the Euro Japanese yen. Let's go see what it is doing. Yesterday, it too had a key reversal session. We see the interest session high and low exceeding the prior day out there. What we really see here is this little doji candle from the trading session of November 29th. We see how that has acted as a resistance zone out here. You're seeing a move lower. That does not bode well for prices inside of the U.S. stock market. What is likely to happen out here? Well, let's take a look at just simply normal retracements out here. Normal retracement says the 0.382 level, 136.64. That says that what it really ought to do is come back and test the consolidation that it broke out of right around the 135.47 area. So long as this continues to move south, that means lower out here. The direction of our markets should also be lower overall. Let's go to Don in Odessa. Don, thanks for calling. Thanks for holding. How are you today?
Good morning, Steve. I'm doing great. Thank you very much.
Perfect. You want to look at ticker symbol CLF, I believe. Tell us what you're doing with Cliffs Natural Resources and how I can help you.
Thinking about buying along on that today if we get a close above yesterday's high.
CLF is the ticker symbol. So we're going to put on, so you're looking at a close above yesterday's high. Yesterday's high inside of Cliffs Natural Resources is 25.69 out there. I would say if it closes above 25.69, that could be a buy. I could see that 25, and yeah, I could see that absolutely.
That's short and sweet. I appreciate it.
Well, I'm just looking at. I mean, that would be the signal. Is above 20 because that would certainly be the signal. Now the key here is going to be this. So here would be the caveat. So you've nailed the entry price on this equity. What you'd have to say is what's going on in the general market as well.
That's my big concern, really.
Yeah, because do you want to take long positions in a market that may still be going down out here? So I think it's let me actually pull it up now on this charting system out here. So what's nice is the new tools that I've created, I can look at something and immediately give you conviction as to, from a momentum standpoint, is it a buy or not. So that's why you said that was short and sweet, but because it's really simple. It's like, I'm surprised how simple it's actually gotten. But let's take a look at Cliff's Natural Resource. Let's take a look at what else it might be doing out here. I've got volumes and everything else and any other patterns. So if we take a look at Cliff's, I think you've picked out a nice-looking equity out here thus far. Now, you're going to probably run into some resistance out here at the gap from February 13th, right around the $31 area. Did this thing have a confirmed A to B equals CD? 16 million shares on August the 12th. Got up over that on about, I'd say, you did. You most certainly did. 17 million shares on November 1st. Let's see, what is that A to B equals CD? You probably already have that figured out.
I actually don't. I haven't taken the time to mess with it. I liked what I saw as far as all of the indicators that I've been using, RSI and MACD and the stochastic. And also we had a bullish engulfing yesterday.
Yes.
And it's been holding up really good with the market going down.
Yeah.
So we're above the 50, we're above the 200.
Yeah, no, you're absolutely right. And 3039 is your 1-to-1 A to B equals CD. I think that so you got to do you've got to do the risk reward on this. It could run into some significant selling pressure back on February 13th. This thing had a downdraft, a big gap down, which was with 35 million shares. So you're coming in there certainly with lighter volume. And the high is 31.20 out there. That still might be a good reward to risk trade, though.
Well, I was hoping just to get up to the $29 area.
Okay, perfect.
I do expect it to reverse up there.
Perfect.
And I was going to buy an option on it as well.
All righty. Hey, Don, thanks for calling.
Okay, thank you, Steve.
Thanks for alerting us to Cliff's Natural Resources. I hope silver. We'll be right back, folks.
Take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, the Dow is off 57 points. The S&P is off 7.5. You know, when I opened up the show this morning, I talked about Robert I in King of Scotland. I talked about the more important thing really was the spider. The spider having tremendous patience, having the proper tolerance and having perseverance. So it's nice to hear from Don in Odessa. And he's got the trade set up. He's got clearly the patience because he knows what he's waiting for out there. And it really works that way in life. Never, ever give up. I showed you the one little trading tool that I use. It helps me to identify when bounces are going to take place out here. Now, and this is called price relative strength divergence pattern out here. This is not taught. It's not. I'm not aware of anybody that uses it the way that I do, and it's a matter of putting a number of different things together. Don had mentioned the bullish engulfing candle that had showed up on Cliff's Natural Resources, and that's why I say the must is you must, on any pattern that you have out there, you want to get a reversal signal. Otherwise, price is going to continue in the direction that it is coming from. So that's how putting all those tools together. I know Don's been to a number of my workshops. I subscribe to the newsletter service from time to time. And folks, if you've never tested Mastering Probability, now is absolutely time. In fact, you want today's edition. I guarantee you there are lessons in there that I teach you. It's not just a newsletter that says just do this or do that. I give that as well, but it is a teaching newsletter out there. There's always morsels, so if you're looking to try to understand the markets out here, this is a newsletter that you absolutely want to go ahead and subscribe to. Look, all it costs is a deposit. Because I know if you pay for something, you pay attention. So if you get it for free, and you're not paying for it. You know how that works in life out there. So if you've ever considered it, just simply go do it, because today's a newsletter that you absolutely want to have. Now, the reason that I even bring up all this as we take a look at this is you can see I've automated a portion of this trading strategy. And I ran into an obstacle. This is a trading strategy that's important because if we go take a look at actual tops inside the marketplace, we take a look at monthly or weekly charts out here, what we'll see is that the same condition took place at the 2000 highs, at the 2007 highs out there. So it's the most consistent pattern to identify reversals inside of a marketplace. This here is, we're just looking at a 30-minute chart, a short-term chart out here that utilized this. But you see, I spent a lot of time and a lot of money and a lot of energy creating this tool out here, wanting to create a black box system. And I ran into a problem that I didn't realize we had until we were well into the project. I tried to solve it on a number of different things. And you know what, just like Robert the first out there, I went into my little cave. If you're a guy, most guys, as you know, have caves. I've got my cave. And I went into my cave and, I had a bout of depression. It lasted for, I don't know, probably a day or two. Of course, my depression are most people's highs out there, but I was disappointed, to say the least. And in any event, what it led me to, though, was a better tool. It led me to having the patience and the tolerance and the perseverance, mostly perseverance, say, I'm not giving up. But what I did was I took a look at other patterns that were taking place in the marketplace. And that's why when Don asked me about Cliff's Natural Resources, I've developed a system. I've got it up here. I teach people in my newsletter how to actually use it. And so when he was able to give me the price point and said yesterday's high, there was a set of tools out here where I was able to quickly look at it and say, absolutely, that's it. So go learn this system. Let me teach you how to use it. Go check out the newsletter service, Mastering Probability, and you will be a very happy camper. The VIX is above that 50-day exponential moving average. It's trading out at $14.98. That is never good for the marketplace. Folks, if you're off to start your Wednesday, have a wonderful Wednesday. Always great to be here with you. I'll be back in a few minutes. Otherwise, I'll see you tomorrow morning. Take care and have a great day. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.